Hi guys, and welcome to this continuation, part 3 of the pattern series. This is the continuation of the triangle part of this pattern series. And in the last session, we talked about the triangle star and the different types of triangles there are, you can find on the chart. Actually, there are more triangle patterns, but yeah, I just pointed out the most important ones. There are some special ones we are going to talk about later. So for now, I want in the next step is about going through each of these triangle patterns, and yeah, we are going to dive very deep into this, examine what is happening in a triangle, how do we analyze, how do we contextual price action analysis, the thing I mentioned on in part 1. And how do we find symmetrical triangles, rising wedges, falling wedges, broadening wedges, whatever, based on our contextual price action analysis, supported resistance analysis. What do these patterns tell us? How do we read the bullishness or bearishness of the pattern? How do we come up with scenarios based on these developments in that pattern range? And how do we trade it? So all of this will get answered sooner or later. Of course, it's a lot of stuff to cover, and I always fear to leave out important things. So, yeah, we have to go through this step by step. This is the best approach, I think. So, this is because we are going to start off with the symmetrical triangle, and I'm going to write this down so you know we are not talking about symmetrical triangles. Symmetrical triangles, as I pointed out in part 2, are neutral patterns. They don't tell us anything about the breakout direction directly, based on simple price action. To understand what a symmetrical triangle is and why it is often a continuation pattern, you need to understand what balance is in a market. The concept of balance is very simple. You have a down move, you have an up move. You have a down move, an up move, down move, up move, like this. This development is in balance. You have what you have to one side, you have to the other as well. There is equality. There is a state of equilibrium. And this is what the market is aiming for, what we can expect from the market in theory. However, in reality, of course, we have trends. We don't have sideways price action in all eternity. We do have trends. And this makes things, of course, more difficult to estimate how they will actually unfold. However, it is also easier for us because we can use this knowledge to our advantage and see when the balance is not in place, when the balance is disturbed. When we see or notice a state of disturbance in the balance, we know that something is off, something is happening, and it tells us a lot about bullishness and bearishness of the current situation. Now, if we have to come back to the triangle, to the symmetrical triangle, we have a down move. We have a down move. So now in theory, we would, based on balance, we would expect a move to the upside. But if this down move rolls over into a sideways move, like this, the balance is disturbed. The balance in this case, in this structure, is disturbed. It tells us that instead of seeing a sharp move up to reinstate the balance here, we see that price action is being pressed it is finding a bottom here, a temporary bottom, but it is being pressed against this bottom and it can't recover. So price action in this range, after a down move, we see this kind of sideways price action, is in fact bearish, because If it was neutral, we would see something like this. If it was bullish, it would go higher and maybe even higher, then continue down. So, and a trend would develop here. But this is not the case in this kind of structure. And look what we got here on Bitcoin. We had a down move to this point, and we have sideways. This is this is a representation of this structure. Now, if we see this kind of move down, and then we see a pattern that is neutral, that actually tells us there is a state of balance in the local area. It also tells us, if I draw a symmetrical triangle here, it tells us this local area is in balance, but this broader, this wider area is not in balance. It is in favor of bears because bulls are not strong enough to reinstate the balance in this area. So the overall situation is bearish. The overarching trend is bearish. So if you see a neutral pattern in a bearish trend with a bearish distorted balance, we can expect continuation down. Because it's like this pattern has the value 0 because it's neutral. The overall trend, because it is down, has the value -2. So you add them and you come to -2. So the bears, the more downside, the situation favors the bears and more downside price action because the overall situation is negative. We have a neutral pattern in a bearish development with distorted balance to the downside. So it is likely we will go lower. This is why a symmetrical triangle is often a continuation pattern. Not always, but often. It is not because of the pattern that this continues down. It is because of the broader developments, the wider developments in this area that has a negative balance here, as you can see. So if you look at this, we can draw a symmetrical triangle here. Let's talk about how to draw triangles first to make this, because I think this is a good time to talk about this. When we are looking for triangles or other structures, first of all, one thing that doesn't matter is how well the wicks and candles are connected. This is not what counts, especially not in the technique I'm going to teach you. I know there are a lot of explanations that tell you you can only connect wicks and you have to have 3 touches or whatever, or you have to only connect candle body closes and opens, and yeah, they have to align in some way, and there's some degree. All of this stuff doesn't matter. It's ridiculous. I'm not following this because it doesn't make sense. This is it's overcomplicated. And it is completely off reality. It's completely disregarding price action reality if you start looking for, I'm going to connect this wick with this wick, but not with this candle close because it doesn't match my rule. Sure, you can follow whatever rule you want to follow. If it works for you, okay, it's great. However, I personally don't think very highly of rules like that, simply because they disregard reality. And reality is price is doing something here. And it is converging. We have converging support and resistance in this area after a down move. And the tops and bottoms and highs and lows are defended by bulls and bears over and over again, as you can see in this area. And this is the reality. So this means bulls and bears are equally strong here. Equally strong after bears have already shown their strength and distorted the balance or disturbed the balance to a negative degree. So bulls are weak in this area. We have a strong momentum down because of this force. In terms of psychology, we would talk about fear. People are capitulating here. They are selling into this because they fear it's all over. Of course, other players are accumulating, but this takes time. And what we can see here is the continuous pressure from above because of this development. So this move has aftershocks, and these are the aftershocks of this move we see here. On the other hand, we have bulls defending this area. They are accumulating this area because they think it's a good buying range, which it is. And yeah, they are making use of it. So, okay, this is what this pattern tells us. It's neutral. It tells us there is a balanced local state, overall bearish outlook. So we have this continuation down. It is the logical outcome of this symmetrical triangle we have here. And we can draw this however we want. We can also, let me get rid of all this. I can go to the line chart and start drawing it like this. For example, it is the same, simply because what we are trying to bring into a structure here is the logic. It's the price action, the reality. We are not trying to abide by certain rules simply because they exist. So we want to, we can draw a trend line like this. It's perfectly fine. You can draw it like this. I mean, if you're new to TA and you see a line like this running through these highs here, it looks ugly. It doesn't look right. It doesn't look right. And as a perfectionist, you would probably say, no, this is not acceptable. I can understand this, and you don't have to do it like that. But all I want to say here is that we want to get a grasp of the situation, and what we are seeing here, this is like a vector. It is not the resistance that I'm drawing here. It is the vector. It tells us, I could draw it as an arrow. It tells us that the bearish force is coming down here at this area. It's pressing price lower and lower and lower and lower. And the bullish force is coming higher. It's trying to defend the swing lows. And it's pressing price into this very narrow trading range, which I call a pressure zone. So in this case, everything is clear. We don't have to have perfectly aligned trend lines. We don't have to have 3 touches to the upside or whatever. This doesn't play a role. It's completely irrelevant. There are rules like that simply because there are studies, quantified studies, that have examined that a symmetrical triangle with X touches to the upside has a probability of 67% of breaking down or something like that. And this is because it is being spread, but not because it makes sense. It's just because the data has been it has been analyzed like that. And it is always about probabilities, but we're not talking about probabilities. We're talking about what is happening here. And I already told you that because of this down move, the balance is disturbed. Now we have a state of balance in this area. Perfect. But this is not what we would expect after this. So it is a bearish sign because it is not strong enough. So we continue down. Although this continuation down was very weak. This is, of course, possible, but this doesn't matter at this point. Right here, the important part is it did continue down. So this is why a continuation pattern is a continuation pattern. It's not because the pattern itself is a continuation pattern, but because of the situation, the balance that is in a trend. The overarching trend is disturbing the balance, and this leads to a neutral pattern becoming a bearish or bullish one. This is so the reason for this pattern to be bearish in this case is this, but not the pattern itself. This is quite interesting. Let me show you something else. I mean, if you're unsure how to draw your symmetrical triangles, you can go for different approaches. The first approach is you connect wicks, the outer wicks. So these you get a trend line or line that hasn't been crossed yet. This is a very good approach to see where outlying wicks might end up. If you get a spike up or a sell-off down, you might come to the point that this line becomes relevant. But you should already see that the situation is a symmetrical triangle here without a line. So this line is unnecessary for you to to see that this is a symmetrical triangle. You have to learn to see these things without lines, without trend lines. This, you see higher lows, lower highs, converging support and resistance, stable. We have some center line here, maybe, that is support and resistance. So you can see this with your eyes without drawing any lines. And this is very important, a very important skill, because then you start to look at price action and you're not starting to look for, is this high connected with this high? Oh, it didn't really reach this high, this trend line over here. You start questioning the pattern. Does it make sense? You're connecting this wick with this wick, and you see, okay, a third touch, nice, but on a different exchange, maybe this wick is higher and it goes like that. It doesn't hit here, so you get doubtful. You don't really know anymore. Is this still this kind of pattern? You have to, the first thing, I mean, patterns are difficult enough. You don't have to overcomplicate things. So get rid of the idea that you have to get it perfect. In most cases, it won't work, and it's not necessary. It's only necessary when you want to find support and resistance trend lines. But in this case, we're talking about the pattern and not the trend lines. The trend lines are just tools to show us where the support and resistance might be at that point in time to enter or exit trades. This is a tool that we can use, but it is not the tool to use to define the pattern. And I know more than 90% of traders do it like that because they learn it. When they study patterns, they are being taught that they have to draw trend lines or levels, and this makes the pattern. But this is not true. The pattern is there without trend lines and levels. Look at this. I'm going to apply my BB heat map indicator. And I'm going to switch, because I'm a 4-hour chart. Let me choose the MTF 4-hour support. And then I'm going to add a resistance one. And here you can see the pattern without trend lines and levels. You can see the pattern. Why? Because the resistance is coming down here and the support is coming up here. And there you have the pattern. There you have your symmetrical triangle without any rules. You know that the support, the resistance is pressing, it's pushing price down because of the momentum generated, the fear, the panic in the market, sell-offs, capitulation. And you have accumulative pressure here in this region. You have people and traders who expect the balance to be restored by continuing to maybe this level or higher. But it didn't happen here. So this alone, this pattern being existent in this region despite this situation, tells us there is disturbance in balance, and this is a bearish case. So we have to expect down, even if support is here, because in a pressure zone, the stronger force prevails and the losing side will get violated. In this case, the support gets violated, but as you can see, not much. So this is very important because it applies to all pattern drawing. There are exceptions. When a pattern strongly relies on support and resistance, like trend lines, for example, levels, we often have this with necklines. And then it's a different story, because necklines are very important, but in a symmetrical triangle doesn't have that. And wedges don't. Wedges neither. So this is first very important key takeaway. Another thing I want to talk about. If you want to find support and resistance trend lines or lines that you can use to visualize your patterns, you can certainly come up with all kinds of approaches. You can connect a wick with a candle body, for example, and do it like this. You can connect a wick with a wick. You can also connect a wick with a wick and something is going through there, some price action. This is not a problem. You have to find the most accurate representation of declining resistance as possible in this case. This is your goal. It's not your goal to connect this in a perfect way. The same is valid for the support, of course. However, if you're going by wicks, one thing is this is very important. You see this big capitulation wick over here. When you're going to draw a trend line from here through here, you see that the incline is very steep, a very sharp rise here of this trend line. As you can see, it is still support and resistance. It works. However, you have to keep in mind that your goal, if you want to draw a pattern, not just a support and resistance line somewhere, a pattern. If you want to draw a pattern, your goal is not to be accurate, as I just explained. Your goal is to find the vector that represents the incline, the rising support layer. So is this an accurate representation of the rising support layer? Let's get back to the support heat map. No, it is not. And this is because this week was overperformance, a lot of liquidations happening, and on BitMEX, which features future contracts and high leverage. Of course, this wick might turn out more stronger than on other exchanges. You could have, you probably have a wick to like 30K on a spot exchange, for example. If you look at Bitstamp or Coinbase, I don't know, not all wicks go down to 28K. And this is a huge problem, because if you try drawing a pattern based on a wick that was made or produced in a capitulation scenario like this, then you will run into problems, because it is not this trend line is not an accurate representation of the rising support in this area. You can use this line as resistance here, and support and resistance, yes, but not as a pattern trend line. So what you can do is zoom out, and now just feel how this pattern looks like. I feel it like this. This is how I feel it. Look, it doesn't touch the wick down here, it doesn't touch the wick down here, but this is how I feel that the support is rising in this area. Of course, you can draw it like that when we are beyond that point. Sure, it's easier. If we are here, it's more difficult to draw it like that. Sure, don't get me wrong. I know that it's easy in hindsight, and let me rewind this to this point. From here, it is more difficult. Yes, I mean, if we are here, look at this. You can still feel the resistance declining here. You can feel it. And in this area, it is a bit more difficult, because we have these panic moves here. But you can see with this kind of price action here at this swing low, this low, this tells us this is the core support range. It could, if it was a bit lower here, maybe like there, and we can start to find our pattern this way without relying on some random wicks that could turn out completely different based on the exchange. But here, this is, in general, when you see, you usually don't see support rising like that. This is very unusual. We have normally, I mean, the flow of the market, this is something I will teach you in a mastery class later. But the flow of the market is usually something like this. So you can see that the support is not rising like that in this area. This is unlikely. It is usually rising something like this. And this is how you can find the pattern defining trend lines and support and resistances. So you have the pressure from above, and you have this pressure from below, and then some pattern is forming here. This is how a symmetrical triangle comes to be. In this case, sure, it is not easy to discover the symmetrical triangle here, because a move down is missing that confirms there is this rising support. This is still missing. So we could still see some kind of inverse head and shoulders here instead. Looking at this kind of shape, I know this is not an inverse head and shoulder, but you could, if you rely on pattern recognition, you would probably more think of an inverse head and shoulder here, than a symmetrical triangle. With this trend line, maybe, but you could also maybe draw a channel like this or a broadening wedge. So it's not crystal clear. If you know about the flow of the market, if you know about balance and flow of the market, two of my biggest concepts that I want to really get you into, you know that the flow is running like this. Maybe a little bit different, like this. And then you have this pressure down. And then you have your symmetrical triangle. And you can tell that this is a continuation pattern. It's possible. Okay, so let me play this further. Now we have, look at this. Now we have a little bit more data, and you can see that price is trying to find a bottom in this area here at this trend line. Now we can feel it much better. We have this, and we have, with this kind of bottom attempt to make a bottom, we can draw this much better. We can feel it, that something is brewing here, pressure from below, pressure from above. And then we know, without actually having any kind of trend lines, except for this one maybe, which is very clean, but we don't have a clean trend line at the bottom, we can feel how this is developing. This is how you can how you can do contextual price action analysis, find a pattern this way. And then, of course, we have to observe how the pattern develops, what is happening in that pattern. So you have to get rid of the idea that a pattern is a visual object. It is a visual object, but it is, what is it more is, it is a bit of price action that has a certain meaning, that tells you a story. A pattern is, as I described it in part 2 with the triangle star, a pattern is something that tells you a story. It tells you what is happening. And the visual appearance is not that important. Sometimes when you approach it that way and you really master this and you really come to the point where you understand how to find patterns with contextual price action analysis, you come to the point that you see patterns that others don't. Sometimes you see a head and shoulder or a triangle somewhere, a wedge somewhere that people don't see because it is visually distorted. It's a completely different pattern on the visual layer, but on the contextual layer, it is exactly that. So you can trade patterns others don't even know they exist. This is the goal, actually, that you can find patterns this way. And in a symmetrical triangle, you can train this very well because symmetrical triangles are easy to spot. You just have to look for a state of balance after a move. Let's look for a different example. For example, here. Do you see a symmetrical triangle here? In this area? I do. I see a symmetrical triangle here. Why? Why do I see a symmetrical triangle? Because I know we have a move down. The state of balance is distorted. I would expect a move up. It doesn't come. Instead, we're getting a sell-off here already. We're getting lower highs. I can feel the pressure coming down. And then we have some kind of inverse head and shoulder structure here, which is kind of, it means there is accumulative pressure down here. We have higher lows, higher swing low here, so I can feel the pressure coming from below. And voila, we have a symmetrical triangle. And it continues down. Look, most people don't even realize this is a symmetrical triangle because they try to connect these wicks and then they come up with some shape like that and it doesn't make sense. And yeah, but a pattern is more than just a visual structure. It is a story. And the story is bulls are fighting back here and bears are pressing from below and both are in equilibrium. They are in balance in this local area. So we have a symmetrical triangle. This is the story. Yeah, this is, you should realize by now, this is a completely different approach to what you learn in basic TA courses. But this is the way I find to be most exciting because the market tells you a story. And if you can read the book that is given to you, if you can read and understand the story, it's a super exciting thing. It's super fun to watch the markets and to see if your assumption is right, if you're right with your ideas based on how you interpret the market, what it is doing. Here's another example. You can see most people would probably draw a trend line here, but get, they would probably wonder if this is a symmetrical triangle, because they are missing a move like this to confirm that this trend line is actually fulfilling this visual representation of a symmetrical triangle, but it is not doing so. And instead you can also draw it as a level. You can see this is a horizontal level, and then you have some kind of ascending triangle, right? This is also the ascending and descending triangles are also triangles I'm going to explain. The triangle star doesn't cover them, but yeah, maybe I will add them to the list sooner or later. Yeah, but I'm going to explain them as well. So yeah, you can draw this both ways. You can see that there is some kind of rising pressure in this region here. You know this here because this alone is, you can expect this here, but it's not crystal clear. It becomes clearer over here. And then you have this level, but you have also this trend line. So yeah, it's not crystal clear. You can, if I draw a vector here like this, and I draw a level like this, you see both is valid. So what now? Is this a symmetrical triangle? Can we expect continuation? First of all, it is important to understand that a symmetrical triangle and an ascending or descending triangle are very similar. There are not many differences. Just one fact: one side is not as strong to keep the balance. So when you have an ascending triangle like this, if you consider this to be one, then you see that the bearish pressure is not strong enough to keep the local balance. Bulls are stronger, right? And if you draw it like that, you could see there is bearish pressure coming in. We don't have we didn't actually reach this high perfectly, and most of the candle closes were below. So there is pressure. Both is valid. There are situations when patterns are, when multiple patterns apply at the same time. And what we can see here is that bears are not, they are pressing price down, but only a little bit. So they are not as strong as expected, and bulls are clearly stronger. This is what this range tells us. So ultimately we have a move to the upside. It gets rejected higher, but we have this move to the upside. The bulls prevail in this area. So if you're unsure what kind of pattern it is it this or this? If you're unsure, read the situation. Bears, we expect balance. We expect balance in the overarching trend. We expect balance here at this level. As you can see, it is a center of gravity here. We expect balance. But we see less price action below, more price action above the center. So it tells us there is clearly more strength by the bulls to keep it higher, if only a little bit. But bulls are stronger in this region. We are coming from a bullish trend. Balance is still leaning bullish. So in referring to the example from before, we don't have a zero here. It's not a clean symmetrical triangle. I would give it a +1, not a 0, because bears are not as strong as bulls in this region. And the overarching trend is bullish, so we have the +2, so we have actually +3 and not +2. If this was a proper symmetrical triangle, we would have +2, which is still bullish, and we would still expect a move up. But this is a +3. The outcome is the same for both patterns, but the reading is a bit different. Yeah. You can find symmetrical triangles on all time frames. The next thing we're going to do is to dive deeper into the price action within a symmetrical triangle. And I want to pick a different example. I'm on the 4-hour chart. I want to pick a low time frame example of Bitcoin. Maybe a triangle that is a little bit more difficult to spot, to identify as such. Not much going on here. Yeah, we have one here. So here you can see, you can feel the pressure. You can feel the pressure running through this area. And it is confirmed by, when you draw out this trend line, it is confirmed. You can feel the pressure coming from above. So you have this kind of symmetrical triangle here. In this case, you can see, maybe I draw this differently. So the force is running through here. And you can see that this structure, it is a typical case of equilibrium in this area. We have 0, we have +2 because of the trend, which is +2. So we expect the bullish trend to continue, so this to act as a continuation pattern. However, what is happening here? We are having an attempt to break out in a bullish way, but it gets rejected. It gets rejected and smashed down. And this is something we see very often. It is called a failed breakout. And symmetrical triangles, as well as ascending and descending triangles, and less so wedges, but also affected, they often suffer from failed breakouts. A failed breakout is, I have a session on them actually, a quick TA session, I think. A failed breakout is an attempt to continue the trend here. As you can see, we have this structure. We have this attempt to break higher as expected, because the balance is still, the bulls are still stronger. However, we have a pivot point, where the market conditions change drastically. And this pivot point can be based on a support and resistance entity that is very strong, maybe. It is one possible reason for something like this to occur. It is also sometimes based on accumulation and distribution structures. So for example, Wyckoff distribution or accumulation. And yeah, we often see these, they're called UTAD. We often see these moves that get people bullish in this case, because it is breaking out, breakout traders coming in, shorts getting liquidated, and then it dumps down. In bullish environments, we have to expect price action to be nasty like that. It's normal. The question is, can we expect this in advance? Can we see within the pattern, while we are still within the pattern, can we see that there's a risk of this happening? We expect this move. We expect this move. This is expected based on what we see here. But can we expect this and this to turn around as well, simply based on the pattern? This is a good question. And it's not easy to answer, because sometimes it is possible, but sometimes it is not. The first thing we have to look for in a triangle like this is how weak or strong is price action. Since we know that the trend is up and we have some, let me draw the equilibrium line, the center of gravity here. We know that we have a center of gravity. It's being, as you can see, the price is basically trading most of the time above the center, which means that it is actually bullish. So we see strength. We see accumulation patterns, we strong bounces, but this bounce here was not as strong. So we are going to dissect this range, and I've just given a hint what to look for. Maybe take 1 minute of your time, pause the video, and think about what would you look like in this structure to find out about the probabilities to see this becoming a failed breakout. This is, you can see the signs in this structure, but they are weak. And this is, of course, it's not easy. If it were so easy, if it was so easy, people would be making money all the time. But it is noticeable, and there are things to look for. The weak signals in the market that tell you that maybe things are changing, and maybe the bullishness is it's getting weaker. So have a look at this for 1 minute, pause right here, and then come back with your ideas. Okay, so let us look very closely at what is happening in this structure. We start from the very bottom of this impulsive move here. We see a skyrocketing, price is skyrocketing higher, and it is consolidating a bit, finding support and bouncing very strong off this support, making a new leg higher. But now here you can see already something very important. We have a flash move up, and then let's look at this in terms of vectors. You have this move, and now you have this move. It's not as steep anymore. And it's also not as large, as you can see. Magnitude of this move is not equally large. Now you have a third leg up. The incline is not as steep anymore, and it's also it's a smaller move compared to the previous ones. This tells us that upside momentum and the strength is running out, and bears might be taking over. This was what I was talking about in the case in part 2 when I was talking about the rising wedge. As you can see, bears are trying to take over, and they are doing so in this particular scenario here. And after breaking this rising wedge, price retraces to a support level, which is this one, a perfectly valid support level, untested, so it makes sense to come back to this level and bounce. And this is the moment where price has got where bulls have managed to create the state of balance in this local area. We now have resistance declining and support rising in this area. We have now confirmed that there is this taking place. You can see this falling pressure, this declining pressure here, not declining, but declining in terms of space and moving down. So you can see this pressure moving down from above. By looking at this development and this rejection, breakout of the rising wedge, you can see that things have turned here. And now we can expect this to go down like that. You can see the pressure, you can feel it. You have to feel it. You can't always see it, you have to feel it. You have to feel this happening. This is something you have to feel. Visually you can see strong move, still strong move, but not as strong, weaker move. The tide is turning. Rejection, equilibrium. And now we have this pressure coming down. But we still have this pressure coming up because it's an uptrend. And this is what causes the pressure zone in this area. This is what makes this a pressure zone. And this is what makes this a symmetrical triangle. Now, where are the signs? We had one sign just now. This is one sign. We have this pressure turning down. After a strong up move, this is always a sign that it might become even stronger towards the end of the structure. Because this is turning down, it will be probably pressing price down with force here. This is the first sign of weakness we have to look out for. Now, what else? What else? Look at the bounces. in this on support. You see, by bouncing on this level, bulls have effectively made this or produced this trend line. And this is the support over here. So you can see we have a sharp sell-off. Not super sharp, but compared to this one. And then we have a bounce, but it is becoming weaker without reaching the highs of this range. As you can see, when the pressure is coming down here, we expect it to come down here. Yeah, I mean, after this kind of vector, we would probably not expect this to die over here. Or yeah, at least it's close to dying here. So bulls have to muster some serious strength to actually reach this. As you can see, they really struggle to get there in this rising wedge structure, which immediately broke down. And then this kind of bounce was pitiful. This was a pitiful bounce. You can see this here. You see this kind of indecision, but a strong sell-off at this swing high over here. There is no strength to be seen in this move. This is strong, but this is not as strong. We have this failed breakout here, which already could have sent price lower, but it didn't. Bulls had made some achievement here by holding this. But as you can see, they really struggle to make this breakout to the upside. Now drew this. So this was the trend line to watch. And as you can see, they really struggle to do this, to manage to break out this of this area. Yeah, it got sold immediately because this was clearly weak. We had bulls. Bulls were stronger. Look at how strong this trend carried price into these highs. But bulls they were strong in the beginning, but became very weak very fast. And we can see this. We can see this playing out. Look, we can see this very easily. Strong here, much weaker, much weaker, much weaker. And then a pitiful attempt to break out, rejected immediately because there's no force whatsoever. So what started strong became weak very fast over the course of a few hours on this day. And the result was not continuation, attempted continuation with failure, and then rejection. So this is how you do contextual price action analysis on symmetrical triangles. It starts with a feeling that something is brewing here and there's some state of balance in this area that could play out like this in a pressure zone, and you know there's a pressure from below, from the upside. You try to find out how strong it is, and then you carefully observe who is stronger. What are there signs of weakness and strength in this pattern that tell you we can expect a failed breakout? It is not always possible, and it is a very difficult thing in certain scenarios. But the more you practice, the better you become. I can tell you that based on experience. Yeah, this is a quick introduction to symmetrical triangles. And yeah, I actually talked more than an hour about just symmetrical triangles. And I still have like 8 triangles to go. And this was the easiest one. So I expect a lot more sessions, a lot more deep dive triangle sessions. And I'm going to split them based on the pattern. So I will release this one as the symmetrical triangle session, and I'm going to talk about the other ones in separate sessions. So this deep dive series will probably become much longer than expected. Yeah, but maybe I was a bit naive to think that it was so easily, yeah, so easy to explain. It's actually very hard to explain because it's a lot about feelings. It's about feelings, how you perceive the market. Like you can feel the pressure down, you can feel the pressure up, and it's turning, and you have some kind of triangle forming here. Yeah, it's certainly interesting. And I can only recommend you to take the time and practice this. Look at symmetrical triangles and try to find out why they did what they did. Why did they continue? Why did they produce a failed breakout? It really helps. And once you're there and you grasp the big picture and you know how to approach this, and you don't rely on certain over complicated rules, and you can feel what is going on in the market and you can read the price action, it becomes so much more fun doing this. Yeah. Okay, this is it for this session, and see you in the next one.